Partners, Raymond James. Brianne, first of all, good morning and thanks for being here.
Yeah, thanks for having me.
So what's your take on this? A lot of investors, the big tech stocks more generally.
Yeah, I mean, I think a lot of what we saw in 2024, right, was the Magnificent Seven carrying the market, at least for the first half of the year. Then we started seeing a little bit more of a broadening out start to happen. For us, we are still bullish on the U.S. stock market, especially the S&P 500 for its outlook in 2025. But I do think valuations are going to become more and more crucial for stock picking and for investors about upside potential through this year, especially with some of the returns we've seen, you know, the S&P 500 up over 50% in the last 2 years. A lot of people are wondering, are we seeing something similar to the 90s where we saw almost the tech boom or the launch of kind of the internet through 95 to 2000, where we saw almost consecutive years of double-digit growth with AI kind of starting to take off? Because a lot of people are thinking of tech and now just tech and AI, but it is a lot bigger than that, right? We're looking at cybersecurity and how important and crucial that is becoming to businesses that are investing in that, especially in our clients in the financial industries. And it is just a broader range too. Cloud computing is incorporated in that too. So we see still upside and we still see room to run. But I do think from a valuation perspective and looking at tranching into some of these large tech names, you just have to be a little bit more tactical in when you make those entry points, and also reminding investors to take profits along the way. Right? Because things can, especially the Mag 7 or some of those big names, can have bigger sell-offs, and you want to make sure that you are keeping those profits in your pockets as well.
This is probably the right time to have a conversation about allocation to the tech sector. How should investors think about how much of their portfolio should be devoted to these big tech stocks?
Yeah, I mean, we still like the tech sector as a whole. And if you're looking at growth perspective from 2024, profit earnings to 2025, I mean, 2024 was about 20%, and we saw the tech sector perform kind of in line, just over that. And then I think same thing for 2020. This year is expected to be about 20% too. And we've seen the tech sector, I mean, before today was up about 1.5%, now probably pulling back a little bit after the news. But again, so there still is upside in the tech sector. We still like some of the bigger names, but I do think, you know, leaders in the group like NVIDIA, you're now going to start to see additional competitors. So it's great to be the first one to market, but when other people start to come into play too, you need to look at other opportunities.
We get a lot of calls, as you know, on Market Call about NVIDIA. Should I wait for a pullback? Should I buy now? Have I missed the opportunity in NVIDIA? Well, now, this morning, it looks like NVIDIA stock is going to be about 10 or 11% cheaper than it was on Friday afternoon. What do you think of this particular stock?
Yeah, I mean, you know, I think we're still bullish on NVIDIA at this time, but I do think there are competitors that are coming into, again, the market. And as much as people have made a lot of money on NVIDIA, we have too. We've traded it a few times. We're looking for another to kind of, have recently taken some profits. And as you can see there, you know, a little bit of a rollover. 1 year, you're seeing the stock up 132%, like great for investors who have been allocated to this. But we would be, again, we're looking for another entry point and think it could see additional weakness in the stock price.
So you remain invested in big tech on behalf of your clients. That's one of your areas of focus for 2025, correct?
Yes. So we still like big tech. Our two sectors that we're mainly overweight, at least from the S&P 500, is big tech or technology still, and then healthcare. And that might be a little bit of a contrarian thing, investment approach. But for us, we look at, again, fundamentals of a company and business and profitability of those businesses. And then we also looked at what sectors did well last Trump cycle. And a lot of people might think, oh, well, Trump's not big on healthcare. But again, where we see even the next investment for a technology or AI is going to be in healthcare. And healthcare was actually one of the top 3 sector performances over Trump's last 4-year cycle. So again, and also looking at valuations, earnings growth we saw in healthcare last year for 2024 was about 5%. This year, it's projected to be about 20%. So we haven't seen that recognition yet in the healthcare stocks or healthcare prices.
Okay, I have not left enough time to talk about earnings season. I want to check in with you on what you've seen thus far in U.S. earnings season.
Yeah, I mean, I think we're going to see a strong earnings season out of the U.S. Last year was projected to be about 9% earnings growth. This year is projected to be about 14.5% earnings growth. So all else being equal, that's our expectations for where we see the market to go. If you think of profitability of the companies we're invested in, Apple, Costco, Google, NVIDIA, if their bottom line is going up and they're making more money and they're passing on those prices to consumers and they're able to keep more money or profits in their pocket, ultimately their price will continue to go up. Do we think it's going to be a volatile year? Absolutely. But that doesn't mean that it's not going to be a strong year. Our expectations are to see, I would say, anywhere between 12 to 14% for S&P 500 return by the end of the year.
That's Brianne Gardner on